Good afternoon, all of you. Renisha from Commodities Research. Today I am here to give my views on outlook on commodities for the next week. Commodity prices generally strengthened last week following severe sell-off over the past 2 weeks. Investors were thrilled earlier as Ireland submitted applications for funding from the European Union. Ireland and European Union finally agreed on a loan package of 85 billion euros over the weekend. The duration of the package will be 3 years with interest rate of 5.8%. 35 billion euro of the package will be used for the bank recapitalization and 50 billion will be used for funding the country. Ireland is the second country after Greece to seek bailout from European Union. The market currently expects Portugal and Spain will be the third and the fourth country to knock the door. With the exception of gold, other metals in the complex fell last week. Indeed, precious metals have been trading in ranges in recent weeks amid macroeconomic uncertainties and geopolitical tensions. Gold typically benefits from rising geopolitical tensions in the Korea Peninsula, but the greenback dollar tended to outshine gold as a safe haven in the last week. Gold has strong support at $1350 and breaking that level a near-term trendline support comes to around 1300. Resistance are 1365 and $1385. Silver has outperformed gold since the second half of the year, and gold to silver ratio has dropped below 50 last week. That is the lowest level in recent months. Earlier this year, silver moved in line with base metals, giving it the heavy industrial demand. However, I observed recently that correlation between silver and base metals has dropped significantly. I am surprised that the correlation between silver and base metals is even lower than the correlation between gold and base metals. Silver holdings in iShare Silver Trust, that is the biggest ETF in the world, has surged to record high of 350 million ounces as on November 22nd. As financial markets are surrounded by uncertainty in peripheral European economies and the Korean tensions. The base metal complex was mixed with nickel, aluminium and lead creeping higher, and copper and zinc were losing. The last week main news that triggered the market was the Shanghai Exchange said that it will raise margins for copper, aluminium, steel wire, gold and other metals to 10% effective from 29th November, that is today. The China's measure to increase margin will dampen speculation and lower the risk appetite. Speculation for further tightening from the Chinese government have affected the sentiment. That said, the metals in the complex continue to possess bullish fundamentals. Oil investors have concern about the impacts of the China's monetary tightening on energy demand, while I expect the government will implement a wide range of measures including the rate hike and increase in reserve ratio to control inflation, and demand for oil remains strong. UK natural gas was the strongest performer last week within the commodities pack, and the benchmark contract jumped around 2% as the temperature in UK dropped below 0 degree. The US natural gas contract also traded at the 4 months high above $4.4, and as the cold weather is expected to drive demand high. For the next week, I caution that the price movements will be volatile in the near-term markets, as market sentiments remains fragile and lingering concerns over the sovereign crisis in the European peripheral remains. Acceleration in China tightening measures and geopolitical tensions in the Korea are also on the spotlight. War and geopolitical tension always induce the fear and trigger investors to sell the risky assets like commodities. However, safe haven assets such as precious metals would be supported for the next week. Happy trading for the next week. Bye for now.